Hey, my name is Brant Phillips, and welcome to Real Estate Fundamentals. Today, we're going to talk about opportunity zones, but more importantly, what I think a lot of investors are missing with the opportunity zone opportunity. Okay, so first and foremost, what are opportunity zones? So opportunity zones were created basically for the government created these in the Tax Cuts and Jobs Act in 2017 to stimulate economy, right? To stimulate development in distressed communities. But rather than using tax dollars to do this, they basically are giving real estate investors tax cuts, right? Basically an ability to defer capital gains or eliminate capital gains altogether for the next 10 years, which is not a bad thing, but I'm gonna share some other information about the opportunity zones and what I think a lot of real estate investors, like the biggest thing fundamentally that real estate investors are getting wrong here, or just missing the boat on altogether. So basically this program, like I mentioned, it can displace or just eliminate capital gains tax altogether. There's opportunity zones designated all across the country, all 50 states, even in just other possessions like in Guam and Puerto Rico and Virgin Islands and stuff like that. There's more than 8,700 qualified opportunity zones already out there. They're all over the place. So one of the first things I would encourage you to do, if you're interested in this, is start looking at the opportunity zone map. I can create, put a link in the comments of this video. But these are basically, like I said, areas that are economically distressed areas, allegedly. Okay, allegedly. And I say allegedly because if you start looking at the maps, you'll see that not all of these areas are actually that rough and that downtrodden or whatever, financially distressed, which to me is crazy. Okay, so you're going to start looking at it, especially if you currently live like in a major metropolitan area, like I live in the greater Houston area. There's areas all over Houston that are opportunity zones. And are they distressed? Yeah, a little bit. But the thing is, and this is one of the big opportunities with the opportunity zones, is to, in my opinion, invest in the areas that are in close proximity to thriving areas. And there's a lot, right? So anytime the government is involved, of course, there's going to be, backdoor agreements, handshake agreements, and these guys who are writing legislation and laws, right? Like they're real estate owners, so they're trying to get, in my opinion, it looks like they've kind of conveniently created some areas that are close proximity to areas where they probably own real estate or want to invest. So first thing you need to do is begin studying the map. And what I encourage you to do is actually find areas that are really, really strong economically, like I mentioned, or in close proximity. And one of the big things that you don't want to do is invest in an opportunity zone. This is what I think a lot of people are missing for the tax advantage. So you never, ever want to invest in a deal or any investment simply because of a tax advantage. Okay, you invest in an investment if it makes solid investment sense, if those numbers work, if it cash flows, et cetera, whatever your criteria is of a good investment. But just because it's a tax advantage does not make it a good investment. Look at what happened in the 1980s with real estate, whenever people were investing for real estate just because the tax advantage, because as the good Lord giveth, the good Lord taketh away, and the same thing, as the government giveth, the government taketh away. So that's one of the big things I think you need to be careful for. If you're investing in opportunity zones, is realize that you're getting in bed with the government. So you have to be very, very, very careful, because you never know when they could pull that, rug out from under your feet, or who knows what other type of legislation they could apply to you that may make the deal a little bit sticky and a little bit rougher around the edges than you're thinking. So All right, so let's talk about some other things. So, investing in opportunity zones, how does it work? Well, there's a little bit of a tricky part. So, what a lot of people don't realize is investors must invest in opportunity zones specifically through an opportunity fund, right? So a qualified fund. So a qualified opportunity fund is basically a partnership, could be a corporation that intends to invest at least, I believe, 90% of its holdings in one or more of these qualified opportunity zones. So I strongly encourage you to get not only with a real estate attorney, but a real estate attorney who has a lot of experience working and forming these corporations for the opportunity zones, because you're probably going to want to set up a separate company. You are going to want to set up a separate company specifically to invest into that particular opportunity zone. So if you do that and you find these areas that are in close proximity to a thriving area, or like the projections is ticking up, trending up in a good direction, that's where I see the opportunity, right? The opportunity is not just because you can defer capital gains tax, which is great, but you can do that already. I've completed multiple 1031 exchanges this year alone. So there's already ways to defer taxes, and you can do that. But like I said, you don't want to invest in something just because of the tax advantage. Another golden opportunity with opportunity zones, though, is to be able to kind of ride that wave of the entire area going up, right? So it's one of the greatest ways to make money in real estate is buy low, sell high, but and to buy in areas of gentrification before they begin to gentrify, correct? Like whenever these areas begin just to be remodeled and revitalized, and that's an incredible way to create massive amounts of gains and create wealth through real estate. So that's where I think a golden opportunity here is to be very, very picky and choosy about where you invest and kind of find those areas that are diamonds in the rough, so that not just the real estate that you're buying, what you're really buying into is just the overall boost to the economy, that synergy that's created for all these other businesses and industries and trades. Because this isn't just for real estate investors, right? There's advantages here for businesses to move like corporate locations into these areas, and other things, incentives, if you will, to help create that financial synergy and boost to that area. So if you can look for those types of opportunities, then I think that you can potentially do very, very well. Now, I will tell you though, it's not all sunshine and roses, because a lot of these areas are really, really rough. And just because they're an opportunity zone doesn't mean it's the right opportunity for you. Be very, very careful, because I will tell you that some of these areas will never come back. And you don't want to be buying in these areas just because, hey, I'm going to get a tax advantage. Well, my friend, if you're not making any money, you're not going to be paying any taxes anyways. So the goal always with any real estate investment is obviously to be profitable in everything that you do. You'll hear me, if you're watching my shows, you subscribe to my shows, you watch my shows, I'm always talking about sustainability, right? At the time of this recording, we're going through this coronavirus pandemic, right? And so never has there ever been a time as a real estate investor, the life of a real estate investor, to make sure that you have built a sustainable business built on fundamentals. Because if you haven't done that, you're not going to be in this business very long. So let me wrap up with a few things. So if you're looking to invest in opportunity zones, first and foremost, look, you got to buy it cheap. Buy it cheap and buy it right. These are low income areas. These are distressed areas, impoverished areas. They were selected, whether it be right or wrong, because of some of the backdoor stuff that goes on with these politicians. But for the most part, these are low income areas. And so not what the future brings. You don't know if they are ever going to kind of make that leap and hit the gentrification stage where they actually turn over. So never buy it just for a tax write-off, right? Look at your numbers, look at your deal, make sure that you have multiple exit strategies, multiple ways to make money on that deal. Make sure that you feel safe, and that your future residents or tenants or what have you, that you have a sustainable plan with that investment. We're looking at some mobile home parks, for example, in these areas because we're very comfortable in that space, very comfortable in that low income housing, where if it doesn't change, we're okay with that, right? Another thing, don't recreate your investing wheel. Stick to your investment model, if your wheelhouse, if you will, and stick to what you know, what your background is. Don't go into an opportunity zone and see some other little new spin on real estate or some type of investment deal or business deal. Stick to what you know best. Okay, so another tip, find the best of the worst. Find the best of the worst. So like I mentioned, so I'm just going to reiterate this again, like there's a lot of areas that are deemed as opportunity zones that have a lot of forward movement, a lot of opportunities to raise rent, a lot of new development that's already going on, a lot of new economy that's happening, things are picking up. So basically find the diamond in the rough, find the best of the worst. Don't just go, guns ablaze into these opportunity zones. Find the very best one. Always buy with multiple exit strategies. Make sure that if plan A doesn't work, you've got a plan B and a plan C, right? So, the last thing I'll say is these opportunities they're fairly brand new. I know that this came out in 2017, but it's still fairly brand new, and there's not truly an established blueprint about the opportunities. So there's not an established game plan, right? Like other types of real estate. So just proceed with caution, get a lot of advice, get a good, real estate attorney to make sure that you've got everything set up on that side. Talk to other investors who are having and experience success with this. Find out what the problems are. Look at all of your risks and weigh your risks versus your rewards before you go into an opportunity zone. And just remember that big government, big brother, is right there behind you. So you always got to keep that head on a swivel, right, when Big Brother's involved, and know that the bottom line with any investment deal that you do is the numbers just have to make sense. Have those multiple exit strategies in every deal that you do. And that's it for now. So please hit the like and subscribe button. Check out our other shows. We're here to help you grow your investment business with a solid foundation built on fundamentals.